Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, the big news this week obviously was the Federal Reserve raising rates 75 basis points. That's what most market pundits felt like the market wanted. They didn't want 50 basis points, they wanted 75 to show that the Fed was aggressive and serious about tackling inflation. Well, I gave us a rally on Wednesday and then turned around, reversed back on Thursday. Why? And then speaking of why, Chairman Powell comes out and says, hey, if you're a young person, you're thinking about buying a house, you might want to do a reset. What, is the Federal Reserve giving real estate investment advice now? What are we doing? Perhaps the Federal Reserve should focus on their mandate, which is controlling inflation without absolutely destroying the economy. And in the realm of destroying the economy, we had another yield curve inversion, further showing that we are likely heading into a recession. As far as the charts, it's zigzag heaven on the way down. We shared that in TradeFinder Tuesday night. I'll show you now. Let's take a look at the charts. At the time of this recording, it is Friday evening, so the futures market is closed. Hey, before we get to the charts, please don't forget to hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. You know the drill. We appreciate it. It really helps. All right, so as we take a look at the chart of the market, you can see that a doji today. We're right in this wave 5 projection here with, call it a 61.8% fib extension. The wave 4 there at 38.2, 61.8 is what you would expect it to move to. So are we going to get a little bit of a bounce at the beginning of the week? We're pretty oversold at this point in time. In fact, having these double gaps, the gap on Friday and then followed by a gap on Monday, was a little surprising to me to see those gaps move down significantly like that. We look at the moving averages and we're not even close to the 10-day moving average, so still significantly oversold. It looks like the markets want to bounce, but are we going to come back and just fill this first gap? Will we make it all the way up and fill this second gap? I think that remains to be the question as we start off next week. But a vertical move to the downside, if you've heard any of my recordings, you know that I don't like it when things move vertical, because quite often when we go vertically one direction, we go vertically the next. So perhaps we get some sort of a snapback rally back up towards 400 and fill that second gap, but we may only get enough to come up and fill this first gap. We'll have to wait and see how that plays out. In this week's TradeFinder on Tuesday night, we shared all these zigzags that we have. And by the way, if you haven't signed up for TradeFinder, do so now. You can sign up right underneath this video or at our website, ewotrader.com. We do it every Tuesday night. It's free. We talk the markets, we look for trade ideas, and we have a live Q&A. It's a lot of fun. Love to have you. So we showed these zigzag patterns here. You can see the big zigzag at the very start of this downward 5-wave impulse pattern. And so the zigzag came down to the 100% extension right there around 392. And if you're going to have an extended C wave, you normally go back and test the previous fib level. That's exactly what the market did. And now we're back down. Now we haven't quite made it to the 161.8% extension yet. And with that doji, does that mean we bounce first and then there's still more lows to come? We could be in the process of putting in a bottom because we are in this tap box. But the fact that we haven't hit the 161.8% extension leaves the door open for more potential downside to go from here. And then if we take a look at this zigzag within a zigzag, so this one is within the C wave of the one I just showed you, you can see that starting at the bounce back corrective move at the end of March, coming down to May with the corrective move, and then the extension right to the 61.8% level, which is what you would expect with this wave 4 bounce. So we're right at the 61.8% level with that doji. So what I'm sharing with you are multiple Elliott Wave patterns that are showing you that perhaps we're at least a little bit of a short-term bottom. I don't think it's way too early to say the bottom is in. I'm not saying that at all. I'm just saying that with the extreme move to the downside, the vertical move, these two big gaps, the fact that we're hitting multiple fib extension levels are a place where the market could bounce and get a little bit of a relief. We'll see how that plays out. And then we take a look at the weekly chart, and you can see that the wave 4 is getting awfully close to that 61.8% wave 4 corrective level. The zigzag here within the wave 4 completed. So we hit a 61.8% wave 4. That's pretty classic Elliott Wave for a potential move back to the upside as well. But remember, the weekly chart obviously takes a lot longer. But we're starting to get some really beat up charts, some stocks that have had significant moves to the downside. We're getting to the point where you might want to start nibbling if you have a long-term horizon for the upside. Looking at the TNX for the 10-year, we had this vertical move up in front of the Fed meeting where the Fed went 75 basis points, as we talked about in the intro. Seemed like that's what the market wanted, but we only had a one-day rally out of it, so it seemed like that didn't satisfy the market. But it's interesting that rates are coming back down at this point. And if I switch and show you the yield curve, you can see now I've got it on the 13th here because we actually had another inversion of the 210. So the closing was 3.4 on the 2-year and 3.43 on the 10, but intraday we had another inversion of the yield curve, another signal that we're going to get a recession. People still say that we're not going to have a recession. I just don't see that playing out. I think that we are going to get a recession, and here's the yield curve right where we are right now on Friday. So you can see how it's leveled off here, a little bit of a spike on the 20-year, but back down on the 30-year in the treasuries. So pretty flat yield curve there. That certainly looks like a recessionary type yield curve, but we did move back down. Notice that on the low today, hit the 10-day moving average. So came back down, awfully close to filling this gap right at the top of the wave 3. So is that it? We just needed to recover this overbought condition. We did hit the 38.2% fib extension on the wave 5, and everybody knew the Fed was going to go 50 or 75. There was some whispers at 100. Maybe that's what the market wanted. This market seemed to say, hey, we want 75, and it's like the Fed gave them what they wanted. And then we turned and rolled over in yesterday's trade on Thursday, right back to the downside. Taking a look at the dollar. Now the dollar moved down yesterday. We had talked about the dollar in TradeFinder as well, and then we talked about it last night in our insiders meeting, which is what we do every Thursday night for our alert subscribers, where we have an extended Q&A and I cover the markets and our case study alerts that we send out to our subscribers. So we had moved down, but right back to the upside on the dollar. We hit that, call it the 38.2% fib extension on the wave 5 here as well, and then held that level. And if we look at the moving averages, once again, just correcting a vertical move into an overbought condition, back down. So I was a little bit curious because of the significant move down in the dollar yesterday, if that was going to show more about economic weakness, because as the Federal Reserve is raising rates, that should be supportive of the dollar. But what would bring the dollar down is significant economic weakness into inflation. Both of those are difficult for the dollar, but the Federal Reserve raising rates is supportive. So perhaps the dollar goes into a bit of a churn here, maybe a little bit of a crawl to the upside here towards that wave 5, but I think the significant part of the move to the upside may be over for a while here on the dollar. Let's look at the VIX. Now the VIX, here we are, and I gave that scenario or that analogy, if you will, of a boxer versus a puncher a while back, where you have the boxer that doesn't have the knockout power, but he just keeps peppering you and beating you down and asking, is that enough? I mean, look what's happening here on the VIX. We're getting this series of higher lows, but we just can't seem to significantly get above 35. So I'm curious as to your opinion. Do you think we need that spike? Do we need a VIX to spike to 40 or above to put the bottom in the market? Or are you back to the boxer's mentality that we've hit 35 so many times that we're just wearing the market out with this heightened volatility, but not extreme volatility? I still feel like it's just a gut feeling that at some point we need that extreme spike, but I could be wrong. And again, I'm curious as to your thoughts. Do we need the extreme spike, or is the volatility pounding at 35 enough? So go ahead and post a comment under the video. Let us know what you think. Let's look at some of the other markets. We're taking a look at the Dow. Now, last weekend's report, we said, all the markets look the same. There are some slight differences this week, so hang in there. You can see that we did move to the downside in the Dow, but look where we are, right at the 61.8% fib level. So another market, the Dow, suggesting that perhaps we could be at a point where we may bounce. We are oversold on the Dow as well from the 10-day moving average, and we have those gaps here. So right at the 61.8% fib level, the top of the tap box on the wave 5. So perhaps we see some sort of a bounce out of the Dow. Looking at the Qs, now you've heard me say this numerous times, I feel like the Qs are going to underperform. I saw on the financial network some people are saying, hey, they're nibbling on the Qs. I don't know. We'll have to see how that plays out as far as where rates go. But historically, when you're raising rates, it's not good for tech stocks. Now we're at 118% extension on that C wave, but when you take a look at the moving averages, we're a little bit oversold on the Qs, but not that much. Not as oversold as we are on the SPY or the Dow. So the fact that we're not that oversold means we could go lower. Are we going to go 138.2% on the wave 5? Are we going to make it to 161.8? I think that's the big question that exists. How far down do we go on the Qs? This one's a little tougher to read. We are starting to get a little more separation again between the 10 and the 50. When they get too far separated, they come back together. You saw it right here. We move back up. We didn't touch the 50-day moving average, which does happen quite often, but we did narrow the gap, and now the gap is widening again. So that's what you're looking at as far as, is there any sign on the Qs that we could be bouncing? If we take a look at the Russell, moving down here, and we've been talking about this in both TradeFinder and in the insiders meeting, we broke below 170. Look where that wave 5 tap box target is, down at 150. Now we're at the 38.2% wave 5 extension, so there's another fib extension in another market that's being hit, which means we could have a bit of a bounce. Can we get back above 170? Last night in the insiders meeting we said, if there's follow through, watch out, we're coming down to 150 quickly. Well, there was no follow through day, no confirmation day. Can we bounce back from this and get back above 170? That's going to be the question in the beginning of the week for the Russell. Can we stay in that range, get back above 170 and have the 170 to 190 be the trading range? Or are we moving lower to where we're going to have a 150 to 170 trading range? If we can't get back above 170 pretty quickly, I think that's a viable scenario as well. Bitcoin, boy, if you trade Bitcoin or you're interested in Bitcoin and you're new to Elliott Wave, you have found your indicator, because Elliott Wave has been all over Bitcoin for the past year or so. And we talked about this level here at 28,000, how we were trying to hold that. And if we broke it, you know the stair steps. If you've been watching these videos, and if you're new to us, look at our past videos on our YouTube channel. I think you'll find that our calls have been pretty spot on, but with Bitcoin, it's every 4,000 is a support resistance level. So we said if we broke below 28,000, we'd go to 24,000 pretty quickly. Didn't think it happened in a single day, but it did. And then if we can't hold 24,000, the next level is 20,000, which is right in the middle of the tap box. So we've hit our level there, and you can see we're right at a 61.8% fib extension on the wave 5 on the Bitcoin. So could we bounce from here on Bitcoin? See, the problem now is that there was such an area of support built at 28,000. Now that becomes significant resistance. So any sort of bounce in Bitcoin is going to have a hard time getting back above 28,000. So are we stuck here until the end of 2023 when we go into that halving process again and perhaps start to get another run in Bitcoin and the cryptos? It looks like that's a possibility. Thought we'd go ahead and show you gold. We had that big spike up in gold on the 10th. So last Friday, looking like, could we get a move? Could we get a bid in gold and get back above 175 and try to make some sort of a run, get up there towards the 180 level? And the answer was a resounding no. Big move back down. So we're kind of floundering around here. At least we held 170, which is another important level of support resistance, but just not a break in the metals as far as being able to break back above significant resistance. We've got to get above 175 in gold in the GLD to try to make a run at 180. So if we can get above 175, consolidate a bit, and get above 180, we've got something going in gold, but we're not there yet. And it's just pretty depressing that another turn back from that 175 level. But again, the positive is we held 170. If we break that, you can see that wave 5 target looming down there around 160. That has to be in the equation as well. So we're right at a 38.2% wave 4 with that move that occurred there on the 10th of June. So does that mean we're going to have that 61.8% extension to the downside? If we break 170, that's what's going to happen. But let's see if we can hold 170. I thought I would add the FXI for China. Notice there is no 5-wave impulse pattern on the FXI. We had this nice bounce to the upside where China came out of their lockdown. And the Chinese government was kind of backing off of their hard rhetoric. But look at this. We have a pretty nice symmetrical triangle being built on the FXI. So there's going to be a pretty good breakout move. That's could be a 5-point move here on the FXI. That's significant. If you look at the DMI, the ADX is moving down. If you're not familiar with us, we look at the DMI as one of our primary confirming indicators for Elliott Wave. The ADX is a good one for triangles. If you get a low ADX, it's telling you that that's in a consolidation phase, which you can see from the triangle. But the lower the ADX, the sooner we are to having a breakout. So getting down towards 15 is a pretty good level when you have a heightened level on the VIX, as we do now above 25 on the VIX. So perhaps we go sideways a day or two more, but we could be getting some sort of a breakout on the FXI. May set up a nice strangle if you're interested in doing that. Holy cow, look at Australia. So here's where we were on Tuesday night in the TradeFinder, talking about, look at that vertical move straight to the downside here. Now we're right in the middle of the tap box. We've got 100% extension. So we had a 61.8%. I mean, Elliott Wave just absolutely nailing the Aussie market. 61.8% wave 4 here, and then moving down to the 100% extension. That's exactly where we should go. So at this point, what's going to happen? Significantly oversold on the Aussie, and then you can see we're not even close to the 10-day moving average. So that was Tuesday night. Where are we now? Did we bounce? Did we move back up? Did we fill some of those gaps? Worse, we relabeled. We're now in a wave 3. So the 5 hitting its target, instead of getting a bounce back up, relabeled to a wave 3, which means we still are due for some sort of a bounce. We're going to have that wave 4 correction at some point in time. This doesn't mean the wave 4 is underway. It means if the wave 4 were to start today, that's about where you could expect it to play out. But it looks like new lows to come in Australia, which that's a significant change from where we were just on Tuesday night. Looking at Canada, not much better. Look at that. So the wave 4, again, a very vertical move. All these vertical moves, we're going to get some sort of a bounce. We just don't stay vertical like that very long. And you can see, again, hitting the tap box right near the 100% extension. way oversold from the 10-day moving average. You've heard me say this before, no security in any time frame gets very far away from the 10-day moving average. We are due for a bounce, a pretty significant bounce in the markets. Doesn't mean that that's the end of things, but we are due for a bit of a bounce here, and Canada will likely enjoy that bounce as well with how oversold it is at the time. Now look at India. So India has a 38.2% wave 4 correction, which yields a 61.8% wave 5 extension. That's exactly where we went. So India looking a little better now. And could India give us a bounce back to the upside? It's not significantly oversold as some of the other markets are. And the problem with India is it's going to have to get back above 40 first. Can it break back above 40? If it can, we may have something going on in India. But the fact that we've satisfied these fib levels in the 5-wave impulse pattern means that we may be looking for some sort of a bounce to give that 40 level a try of resistance. And then Germany, another wave 3 to the downside is just, we were cheering on Germany right here when we had this bounce and said, if any market deserves some sort of a significant move to the upside based on how bad it's been for the last year or two, was Germany, and then gave it all back and then some in a week, just within a week's time. Boom, straight to the downside. Just horrible for Germany. We are a bit oversold here as well. Same scenario here though with Australia, looking for a wave 4 bounce, some sort of a nice move back to the upside, but it's just a corrective bounce with likely new lows to come. So we're setting up here. I was very surprised by the gap down that occurred on our U.S. markets on Monday. You can see how some significant difference, not significant, but some varied differences in the other markets as far as where they are in their patterns. But one thing is similar here is that we do need a bounce. We're oversold in everything, but it doesn't look like that oversold bounce means that we're done with the selling just yet. So I hope everybody enjoys a wonderful weekend. Thanks for your time. Appreciate it very much. Talk to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.